Stock of the day, though, lots of updates flowing through this week. Today, Incitec Pivot, the big fertiliser explosive group, says they updated the markets today, said earnings will be skewed to the second half for the explosive business. Breaking it down, Incitec's explosive business, Dyno Nobel Americas, made earnings of 260 million, Asia Pacific 79, fertiliser $108 million. The MD says the business has been resilient. She's also flagging favourable agri conditions for the fertiliser business for the remainder of the financial year, which sort of goes against what Elders was saying earlier in the week. But market yet to be convinced, down 9% today on that update. Henry Jennings from Markets Today. What did you think of Incitec Pivot's update?
Yeah, hi Koshi. And I guess, the market at the moment does seem to be hunting for bad news. This one was a little bit of a miss. It missed by around 6% in terms of their net profit, which obviously they're being punished for, 8% down at the moment. I guess the problem is that it's once again a second half story. There's lots of optimism, shall we say, from the company in terms of the outlook, both on explosives and fertiliser. But the problem with fertiliser is it can be a bit smelly. And this one does look a little bit smelly at the moment. It's been going nowhere for some time, $3.20. It's almost flatline. We almost need Kiefer Sutherland to come along and give it the AED, give it a bit of an electrical shock. But it has had the electrical shock. It's reset down to around $2.90. You'd have to think that the brokers are going to be a little bit underwhelmed by this going forward. I know there's lots of talk about stronger second half earnings expected from Dyno Nobel America and Dyno Nobel Asia Pacific, fertilizer, etc. But it just, when you read all those positive things, you would think everything was rosy, but it doesn't look that rosy at the moment. So second half stories, and the market's in a really growly, kind of grumpy mood at the moment. You don't have to disappoint by a lot to be punished quite heavily. We are seeing volumes and interest, I think, at this time of year wane considerably. So punished today. I suspect it'll get punished in the next few days, although the fall will be less so. Then it will find a bit of a level. So from there, it's probably a hole, but give it a little time to wash through with these results.
Okay. All right. Andrew?
Well, now that I've turned 60, as you've just told all of our closest friends, I think
I did correct myself.
I know, but it's fun to pick on you. I think that I'll take the role of the grumpy old man here and just say this has just been a perennial underperformer. And if you look over even 5 years, it's been just underwhelming. And, this nonsense around a second half turnaround. Andrew has his amber lights, so what are some of Andrew's amber lights? Change in management, whether management's buying or selling. Another one that I'll bring out on my 50th year or 51st year, as it would be, is around where you see companies talk about, but the second half will be better, this hockey stick nonsense. So this is just... Yeah, I mean, you look at what's one of the drivers. One of the drivers is that you've got falling energy prices on concerns that we are potentially going to come into a recession. Fertiliser prices are correlated to that. Energy prices aren't coming back anytime soon. So this talk of a second half turnaround, I hope they do it, and certainly for long-suffering shareholders they do, but I would be incredibly surprised. It is at best a hold, and frankly, being cranky, it's a sell.
Okay, all right. Tell us what you really mean, Andrew. A bit harsh with that one. All right. Hey, just a quick one without notice. You two, I mentioned it at the start of the week, the Elders update. Here was a stock that was so supported in the market by virtually every analyst and went nowhere, and then took a big step down after the update on Monday. Andrew, does that worry you with Elders, or do you buy the dip? Are you still supportive of it?
Oh, sorry, it depends on which question you're asking there. If it's buy the dip, I mean, I'm just looking at the chart, and the chart just looks dreadful. Sure. And I know Tony Moe in the Marcus Today Forum expert chartist, shout out to you, Tony, has been calling it correctly. It looks dreadful. I mean, from a support point of view, not that I'm trying to take Tony's job by any stretch of the imagination, but I would think 550 from a technical point of view, and even that's being benevolent. Being here in God's own country and full of ag, all I know is that a lot of my ag clients are sort of talking about commodity prices coming back under pressure, coming back to IPL and potentially a turnaround. So no, it's definitely not a buy. It's a stand aside and just let it keep falling away, sadly, because it is a good company, but just not worth it.
Henry?
I've got to say, Koshi, I've been completely and utterly wrong on this one. I thought that we would see a bit of a bounce after the big fall when Mark Allison threatened, actually announced his retirement, and it has just done nothing but go down ever since. So I've been completely and utterly wrong on this one. So I'm definitely searching for an exit. You know, this is the CEO that's supposed to turn this one around, and frankly, it has turned around into a bit of a Titanic, and it's just hit another iceberg and it's falling away. This is the year that he was supposed to be doing a lap of honor to celebrate the however many point plan that he had in place, which had rescued elders from ignominy. Unfortunately, ignominy is where it's destined. And I've got to say, as I say, I am searching for an exit. I'm hoping for a little bit of a blip higher in a better market to try and get out of this one. But I think Andrew's right, and I probably need to take my medicine. This has been a dog for many years, and it has revealed itself to be a dog again.
Yeah, and Andrew, to your point, it was interesting the consumer sentiment figures that came out earlier in the week, dragged down by a bigger drop in consumer sentiment in regional Australia than in capital cities. So, all this thing about commodity prices up, Ukraine pushing up, that's gone. That's in the past by the look of it now.
Yeah, and certainly, I mean, being bashed with 11 interest rate rises, potentially 12, depending upon which pessimist you want to listen to today, is equally weighing on things. I'm very cautious.
All right.